Okay, guys, this is Kel, and welcome back for the revision to this 20th of June 2025. This second session is talking about the difference between a day chart trader and an intraday chart trader. Okay, so what's the difference between a day chart trader? A day chart trader basically use a day chart, right? The horizon is day chart. The other trader is all right. They use is the intraday, the 5-minute, the 15-minute, the intraday 30-minute chart. So what's the difference between them itself? I'll tell you my personal take on this, and you may want to reconsider after listening to me. Okay, let's go now. So what I did is I asked ChatGPT to help me on this so that I can have a better idea to share with you all properly. So I think they did a good job here. So the thing is that the difference is between the time horizon, the trading frequency, and the decision-making pace. Okay, I think this one can quite simply understand already, right? Okay, so let's talk about this one first, the time horizon. Okay, so basically the day chart trader, aka the daily chart trader, okay, basically they use the daily chart, which every day, every candle is represented by one trading day. Now, this sort of traders are typically holding position for several days to even weeks. Now, for me itself, right, for my day trading, using my daily chart, all right, I hold for about 3 to 4 days. Okay, example, the crude oil, I hold for 3 to 4 days. Recently, I think Christopher bought some gold. He hold for 3 to 4 days. And I also believe that this our good friend, Frico, also the buy gold or short gold and hold for a couple of days. I think Richard also does that, right? So basically, it's all right. This is for people who want to buy and hold. And they do that is because they don't want to have no time to watch the market as one, no time to want to go in or in out. Some they say they because save commission because they rather buy one time and keep it, and then the cost will be not too expensive. So there are a few good reasons for that. Yeah? I'll come to the difference later. Now, the intraday chart, what some of us does is that we look at the 1 minute, the 3 minute, the 5 minute and stuff. Now, MT4 only got this M for MT4. I think MT5, they got 3-minute chart if I'm not wrong, okay? So these sort of traders, right, they basically open and close within the same day. Very rare they do overnight positioning, okay? So based on what I'm seeing right now, some of you are actually doing the intraday chart trading, yeah? Okay. So that is the difference in terms of time horizon. Okay, so now look at the trading frequency. So because of day chart trader, right, we trade probably like a few trades per week or per month, and more time to plan, exit, and entry, right? Okay, true lah. We plan more time. For me, it's all right. I'll show you later difference here. Is that I will really look at the chart and then do my calculation and see how much can I make from the market potentially. But intraday trader, right, because of they going in and out so fast, okay, they require very fast decision making and constant monitoring. So that is different here because they use the lower time frame, so they'll be going in and out several times in a single day. I think some of you trade quite a fair bit every single day, like Jennifer. I think trade quite a fair bit every day. Evelyn too, right? Of course, almost. I mean, it's just a right off my head, people. Yeah, some of you also trade quite a bit. So every time when you're trade, right? Actually, I do observe your trading. I cannot remember everything, that's for sure, but at least I observe, yeah? Okay, so now what is the difference between the psychology? Okay, this is where you get interesting already. So day chart trader, less time screen time, so suitable for people with full-time job or other commitment. Emotionally, right, we're more stable due to lesser trades and slower pace. I mean that no kanchong. When you buy, sell, buy, it's easier for them. But the intraday trader, right, they require full-time focus and very fast reflexes, right? Emotionally intense due to the rapid market swings and pressure to act quickly, all right? So that's why some of you is very excited. You all see market, wow, go in, go out. Yeah, it's good. But then, of course, you get very drained out very easily. Okay, so the difference right now, right, is the day chart trader rely on more trend following first. Second, swing trading, okay, and macro signal, okay. Swing trader, I told you, right, swing trader is basically people who rather do this. They rather to sell here and buy back here itself, okay. So that is the swing trader. Now, what is the follow-through trader? We will buy here instead. If the market reverse, then here itself we will sell instead. So when will that give us a big issue is that market go to doji mode, up cannot, down cannot, then we have losses. But I told you before, for us, the doji is part and parcel of the market, and there's no way to control doji. It's like an emotional person. So we just have to just everyday trade and see whether we bump into one doji. But again, you must understand there's a simple way out here itself, which I'll share with you very, very shortly, right? The 1733 rule itself, yeah? Okay, so the cost and risk. Well, because lower cost, because you trade lesser, then lower cost, okay, lesser cost, and then you can slowly see the market and then probably get more stable and much bigger profit. Now the intraday trader, right, they have to incur more commission. That's for sure. Every trade they incur commission, and then after that they may risk of over trading because it's still putting so much, right, and the small market may magnify due to the this leveraging and the frequency of trading. So this one must take note, yeah? Okay. So at this moment right now, right, that I have shared what the chat GPT has given to me, the main 5 thing difference. Okay, now let me now tell you more about my personal take between the 5-minute chart trader and the day chart trader. Okay. So the biggest difference is this. All right. Yesterday someone asked me a question. Kel, how come my DEX I actually purchase it, then the market go against me, then I lose money? Why? I'll show to you right now through DEX. Okay, let's take a look. Now, there's nothing wrong with trading intraday. I think it's perfectly fine. But just that you must understand the little rule of thumb of intraday chart. So I'll come to it very, very shortly. Yeah. Okay. So everybody take a look at this DEX chart yesterday. All right. So the DEX yesterday opened at 23,183. The MLP is 23,338. So very clearly, the market opening price is below MLP. The market will prefer to sell overbuy once the market trade below OP. That is confirmed for sure. Second, you notice that the pivot 2 is very close by, which is at 23,150. So if the market touch pivot 2 and rebound, fine, the market will go up. But if the market smash below the pivot 2, the market will definitely sell. So that is a rising concern. Third, the most important thing is that the KSI is red in color with the KCX blue in color. So with these two in line calling for sell, right? Once the market breaks below OP, confirm will sell. And if it goes above OP, right, then basically every KTR should take profit already if you want to do that. Okay? All clear? If all clear, press number 5 right now. Okay. All right. So with that, now let's go to the DEX side and what happened last night to a student. And I think that it's very common to have this issue. So anyway, let's take a look at what happened. Yeah. Okay, so what happened? Let's go through this. The student is a very good student. He followed exactly what I shared. So at the start of the day, the market opens, right? Okay, then he didn't do anything because it's a red color candle. He didn't do anything. So by right, below OP, he should sell already, right? But because there's no diamond, he didn't sell. So fine, the market still go down, bang, came down, right below pivot 2, went very close to KTR -1. Okay, but it didn't touch. So the student, remember I tell him, saying, if the market don't touch KTR -1, if the market do go up, you go to KTR +1. So the student actually remember exactly what I said. So it was very good. So after that, you can see that the price recover and try to stay above the pivot 2 with the boys coming to buy. So all is good at this moment. Looks very good, decent. And then now this is where the market comes in. The diamond approach here, the trader plays a line across the board. Okay, and then what happened? Okay, this is where it gets interesting. So after that, he buys here and the market stays above the line. So that was good, right? The thing is this, the stop loss, where did he put? The stop loss he put somewhere here. Okay, and then the next stop loss, that's where it is. Okay, so after that, the market will go up a bit, right? So it's a very happy, say, oh, everything going according to plan. Even KSI is green, KCX is black. So everything is according to plan. Now, do note this KSI green and KCX blue, all these things is based on the intraday computation. Yeah, day chart has its own computation. The intraday got its own too. Yeah, so don't confuse the two of them. Okay, so now what happened next is interesting. Okay, so the market is not going higher, right? It came down instead. Okay, it came down instead. So because of that, right, the student lost money. Okay, so lost money, right? Got a bit upset. Like that's natural. So after they asked me why got wrongly, I said that if you extend the line further, do you see that the market go up again? He said yes. And then I said, do you trade? No. Why? Because they thought sure go up already, and then the market come down. Okay, never mind. So now we learned that, right, if you actually has placed it to the trough, it will be even better. But of course, again, I'm fine with that itself by placing whichever is correct. So how to do the risk management? Very simple, all right? From entry price, wherever you enter, to the stop loss price, entry here. Sorry. Uh, so wait, entry is here, stop loss is here. You can do that. Or you can put a stop loss actually to here itself. You can put stop loss to here. Now, what's the difference between the two of them, right? Okay, the first one is how you're following a rule exactly, whereby you place a stop loss at the candle that has the diamond. But if you notice this right now, right, if I take a little screenshot here, take a look, yeah? From here to the highest, to the entry price, it's about 38 point. Not so bad, lah. It's a decent number. But because DAX now is at 23,000, right? So, you need a bit more, lah. But nonetheless, you put on there, it's fine because use is your range, ma. So if your range itself, right? So range, bullet divide by range. All right, then after that you get a size, then divide by this contract size, you get a small little size there itself. Okay, so that one is still fine. But you notice that, remember I told you, right, the market itself, right, has what thing? The market itself, right, for DAX, okay, it's a red candle and everything. So the market will have a tendency to trade lower or any chance. So once the market fail to stay above OP, the market again U-turn and then drag the price count down again. So, but then it was so coincidence after that, the market just couldn't go any higher, lower, right? So this is where things get very, very interesting. Okay, let's take a look over here. The market stays sideways until we're going to see this. Wow, see this diamonds, diamonds, diamonds. All right. So the market is churning, going higher, higher for trading itself. So it should be quite an easy day for those who follow the system. So if let's say the student actually remember that after you have the diamond, you can actually re-enter again. Right, re-enter again, and your stop loss just put at the trough, you're fine. So in this case right now, right, the student puts here stop loss being triggered, but if you have placed stop loss here itself, right, it will not be triggered. Okay, so which is correct, which is wrong, I'll let you decide, yeah? So the thing is this, by right after the student have finished the trade, finished watching the market, right, you can see the market close over pivot, closing above the DAX opening price, and it seems that KSI is green. So basically, so ding dong, ding dong, ding dong, the market eventually sticks up. Okay, so this one tells you very clearly that, okay, that if you are trading in the intraday, you have some swing. It's not that the system lousy, it's because the market, right, is not ready yet. And when it's ready, it will go. Yeah, so this is something that you must take note the difference here itself. Okay, so then after that, we can see that. Okay, so here we go, you draw it, and you can draw, once you draw properly, you will see that the market goes below the shield, the line, and then start to come down and break. Then you try to stick above P2 for a while, another diamond amount shielded. Again, came back down, this time broke below MLP, broke below 53, but there was some interesting stuff. And then after that, the market rebounded again, you draw a line. So guys, what do you notice by now? How many of you noticed this? Have you noticed that the line is getting lower and lower and lower? And that is my personal favorite. When I see the line getting lower and lower, lower, what does it tell me? The market trend is coming down at the moment right now. So that's the reason why you can see that shorting DAX after that was very easy. The day chart itself was green, then the intraday chart is lowering. So of course, to sell this DAX was very, very easy. All right, all clear? If all clear, so press number 6 right now. Okay, all right. So you can see after that for DAX, you can see DAX keep on lowering. Okay, so of course, I told you before, right? Once DAX hits maybe about 1 to 2 a.m. Singapore time, here you don't trade anymore already. This area here don't trade anymore already. Yeah, you go sideways. And plus yesterday was June holiday. No much movement in the market after that. Okay, so this is the intraday sharing. Then what's the difference between day chart and intraday chart? Then what's the biggest difference? Okay, now you notice that when you are trading intraday chart, right, you will put your sell position like this, then you put your stop loss like this. If it's too near, you shift it to somewhere like that, right? So example, if you short here itself, all right, the stop loss can either put here, but it's very nearby, it doesn't make much sense. You put it somewhere higher, which is here at the top of the market, or since you are shorting the market, you can even put at the next highest point of the red candle. That is also fine. So this is your range, okay? So take your bullet, right? Divide by your range. Then after that, you divide it by your contract size. Then you get your volume, your trading size. So, okay, so this is the intraday chart. Now, the thing is that why intraday chart, your trading size is very small because you also use a very small bullet. So basically, right, it's a very simple thing. If you're going to tell me that you got let's say you got $10,000, okay, $10,000. Okay, then you utilize 2% for per bullet, right? So which means that basically you have $200 for per bullet, right? Okay, so what happened is that you have 50 times to lose in a way before you lose your capital 50 times. So you're like, oh, okay, I can play. Okay, so that is one way to look at it. But the thing is that because only 2%, all right, and the range is pretty wide, okay, so you may actually lose out that money very fast, okay, because the market may swing you. As I told you, right, it's that not the trader fault that basically the market went against him and lost out. It's that the market was just not ready yet before it really goes up. So if you have re-entered the trade, that'd be good, but most people won't re-enter the trade, so they'll be stuck and you see losses happening themselves. That is why it's the reason. Okay. So now for the day chart trading, right, you notice a bit of different there. I mean, I've been observing other trainers teaching day chart trading, and I kind of realized something that their students hardly lose money. Then what happened to us, right? Why we lose money is because they have their bullet is very big. Their bullet is very, very big. Right. So what they did is that they kind of realized that, okay, I put $200 to risk in and out, right? I lose money quite fast because the market may not be ready for me, blah, blah, blah. So what they decided, okay, so I got 10K in capital, right? Okay, so maybe instead of risking 2%, they decided to risk between 5 to 10% of their capital for the range. So now let me explain this to you, yeah? So let's say you see the diamond here itself, right? Okay, then you draw a line across it. So what happened is that the next day, the market stays above the line already, right? So can buy, right? Okay, so what the trader does is that there's something to do is that the trader will buy here, and then they realize that, okay, in out very difficult, right? So they realize that, okay, the nearest trough is here. So what they did was that they put a stop loss here. Now at this junction, you may say, wow, Kel, like that, the risk is very big. I understand. So that's why if the bullet is a decent size, like 500 to 1,000, then you divide it by the range, your volume will still be smaller than previously. But one thing to note is that, okay, this is the first time you can see that if you do a day chart trading, you will see market going to your favor and make money. All right, if you use diamond itself, you see make money. But you do intraday chart, the market may swing you in out 2-3 times, then you lose at $200. So you think about this. If I lose $200 3 times before I get it correct, why not consider that the risk $500 to $1,000 for each day chart trading and let the market fluctuates? So you can see that during the day itself, right, the market fluctuates, like go up, came down, go up. At least not so bad because at least the range is still be kept by the calculation that you did. But if you do the intraday in out, you may face the more losses. Okay, because the market may swing. Although the return is very good, it's lucrative. Now, day chart trading, don't expect like 1 to 3, 1 to 4 so easily. Day chart trading, unless it's for a few weeks itself, right? If not, the maximum is about 2 to 3 days only. Because you will see that from the chart itself, right? It's very difficult to have a long-term trade itself because everything moves in a very interesting way. Okay, all clear? So I will really advocate traders to do day chart trading. So example, like you do a CCYR over here, you take a short position, your stop loss place here. Now, of course, again, you may say, wow, so big, but at least you know that even, let's say on this day itself, take a look. Even this day, when you sell here, right, you see the very same day, the market purposely go up by how many? Let's take a look. The market opening price is 23,946. The highest you went was 33,071. So you see the market, the girl was so powerful, he went up first, and then after that, then the price come down. So if you take a look at here itself, if you traded intraday on this day, this little swing here will likely tire you out first before the market really comes down. All right, all clear. So it's actually looking at this. And of course, checking the any a good KCB on the left side will give me a more confident of entering. So in short itself, guys, if you're trading the intraday chart, okay, intraday chart, right, your target is just very small, the next KTR or next technical level, okay? Go in, come out, get out. Okay, that's it. The day done, hit the KTR +1 or +2 or -1, -2, that's it. Your day has ended. Don't go into the afternoon session again and try to squeeze the market unless the market now is going for KTR +3 or KTR -3. So if not itself, every day KTR +1, +2 or -1, -2 has been proven. It works very nicely. So for those people, right, who have the capital that's not sizable and they don't hold for positioning because they're scared that things will change, then intraday is a good choice. Go in, come out, go in, come out. But for people who really want to do the longer term and don't be so stressed up yourself, right, then the day chart. And once you enter the day chart itself, enter and hold for 2-3 days and then let the market decide. Any up and down itself, right, let the market decide. Don't get involved with this. All right, that's where you can get the best of the meal. So, okay, guys, all clear? If that will be all for today's sharing on the difference between the small cap and the intraday charters and trading and the day chart trading. All right, all clear? Okay, that will be all for today. Thank you very much for coming in. Right, I will do some more sharing later on in the afternoon session. Yeah. Okay, take care. Bye-bye.